You are smart enough. Whoever I'm talking to, whoever can hear me and understand what I'm saying, you are smart enough to make your own investment decisions. And if you feel that you don't have any discretionary income that you can invest out there, once again, if you have an IRA, a 401k, you actually have control of that. I know that they try and make you feel like you don't. But if you have, for instance, a 401k and somebody's managing it, and you don't want that fund to be managed, or those funds to be managed and put into unethical stocks and companies, you can simply change that. You can talk to the fund managers, you can talk to the 401k managers, and if they do not agree with what you're saying, open up an IRA. You could roll it over into an IRA. It's still your money. There's no penalty as long as it's rolled over for 30 days. And you can take control of that. I'd like to welcome everybody down to the first meeting of the Babylon Green Party of 2008. Welcome down to the Pisces Cafe, this humble establishment, where the meetings are hosted the first Wednesday of every month. Now, the topic of discussion today is going to be social and economic and ethical investment. Now, the thing is that a lot of people have opinions and ideas on what exactly that means. So I'm going to give you what I feel that it is, and then you can make your own determination. You have to ask yourself right away, what is ethical investment? And you can find all types of people that will tell you different things. But it's kind of like, the way I see it, it's like Isaac Asimov's 3 rules of robotics. You never do any harm to any humans. You have to follow orders unless it's going to kill somebody, and you have to defend yourself and protect yourself unless it's going to infringe on the first 2 rules. And I feel like ethical investing or socially responsible investing is kind of the same thing, but almost in reverse. First of all, you have to know exactly what it is that your end goal is. So anytime that you're doing any type of investment, you want an investment that has an adequate return. You're not looking to just throw money away. You want to actually make some money when you're out there investing. That's the whole purpose of it. It has to fit your risk parameters. And what that means, very simply, as in any investing, even if you're not going to do anything ethical or socially responsible, you have to make sure that it's something that you are comfortable with. Me, I'm comfortable throwing a little bit of money on the crap table and hoping that it turns out well, but most people want to make sure they have a little bit more security, and you have to determine what your risk factor is and use securities and strategies accordingly. And the last thing is you have to find investments that fit your ethical criteria. My ethical criteria are clearly going to be different than yours, and everybody's are really going to be. It's something that's very personal. And it goes directly to what you actually believe. Now, without making this a philosophical discussion, the first question that you have to ask yourself is, what is it that I do believe? What is it that I'm trying to accomplish? Now, the simple rule of thumb that pretty much everybody could follow is you want to avoid any type of investments in any type of companies that make people sick or kill them. Those are usually bad, and that's kind of universally bad, unless you're just in the investment community, in which case that really is irrelevant. You don't want any companies that are going to spread any type of disease. You don't want any type of companies that are going to profit off disease or anything like that. Those are universal. You also, for the most part, especially speaking to the Green Party, you want to avoid any companies that destroy the environment or that pollute, or that do anything that in any way is, deleterious, that destroys nature. the last thing that you normally want to consider, or everybody normally wants to consider when they're doing any type of ethical or socially responsible investing, is you want to make sure that the business that you're going to invest in, or the companies, or whatever the investments are, those people are also engaging themselves in ethical or, let's say socially responsible practices. Now, the fact of the matter is that there are a lot of companies out there, there are a lot of funds out there that claim to have socially and ethically responsible investments. They have funds and whatever. Now, just in the research that I've done in the last few weeks leading up to this, I found a number of those funds, and this is something that once again you'll have to look into personally, but a number of those funds, if you wanted to just go the easy route, I just want to buy a mutual fund and let somebody else that's a professional manage it. A lot of them had companies in there, like for instance, Monsanto, which right across the board is considered one of the most evil companies that's ever existed by anyone that has any type of soul or conscience. GE, which is one of the worst polluters that ever existed. Dow Chemical. How somebody can consider a company that basically killed 100,000 people because of negligence and then didn't pay them anything for it, how they could be somehow a socially and ethically responsible company, I don't know what their criteria are. So what I would suggest is that you do your own homework and you decide what companies that you could possibly live with investing in. Now, if the bottom line is just the bottom line, which is the way that Wall Street and the rest of corporate America wants you to think, then go no further and don't pay attention to any of this. Just look at the companies and the stocks or the bonds that pay you the most. But if you actually care about making any type of difference or making a statement, you want to go out and do your own research and find companies and do it. And this is not something that you have to be that you have to put 1,000 hours in. In a matter of minutes on the internet, I was able to come up with a number of companies. And if I was not 100% sure about them, I just look up their recent news. All you have to do is throw into the Google or a search engine, that company's names, and just look at the news releases that come out. Do not be fooled by PR. Now, this is another thing that a lot of people fall for. GE has one of the best PR firms in the world, and the fact is that GE bring good things to light. They bring good things to life. They make your life better, but that is not true. That is their PR. Yes, they give a lot of scholarships. Yes, they build schools. Yes, they do wonderful things all over the world. However, that's with the profits they make off of raping and pillaging. So, once again, my personal opinion, it's a company that I would normally want to avoid, regardless of the returns, and GE is one of the most beautiful run companies that you'll ever see, and everything they do basically turns to gold. But the fact is that from that gold, they're giving a lot of other people straw. They'll starve people out. They'll pollute the environment, and then fight tooth and nail not to clean it up. Now, the main thing that you want to look at is not where does the company put their profits, because once again, that could be very misleading. What you want to look at is what does the company actually do? What do they create? What is their business? And what is it that their actual business plan is about? For instance, if you can have a company, let's take for instance Pisces Cafe. You have the coffees and the teas are all organic. They're whenever possible, they're biodynamic. But you might not want to buy stock in that company because if you look at the bottom line, they're not making a whole heck of a lot of money. So yes, you want to make sure that the company is doing the right thing, but you also have to make sure that it's a viable investment that you want to be involved in. Now, there are a number of companies out there. For instance, this year has been, 2007, has been one of the most successful years in the solar industry since the 80s. If you bought solar-powered stocks, any companies that make photovoltaic cells, and any companies that make the panels, that make the components for them, you probably hit a major home run. You had the kind of runs that you would never see in those types of stocks before. Sometimes you've seen tenfold investments over the course of a 12-month year, which obviously is phenomenal, and you would take that. Now, it's very possible that, like every other bubble, those stocks have run their course. A lot of people now are looking at, for instance, fuel cell technology. I personally think that the fuel cell companies are doing a great thing. They also are about energy. They're about renewable. They're about not polluting the environment. However, a lot of these companies are not really that viable. Now, there are a few out there that are doing a great job, that look like they're poised for some huge upsides. For instance, if you just wanted to look at a few, you could look at fuel cell, which trades under the symbol FCEL. You could look under Ballard Power, BLDF, I believe it is. These are companies that already have products that are out there. I'll tell you right now, I have seen 1,000 prospectuses on companies that, for instance, have room temperature superconductors. I would love to be involved with that company. I would love to give them money and help them move on to the next level and put their product out there for everyone. But the fact of the matter is, they don't really have a product. They have a theory. And that theory is never going to make you money unless there's a whole bunch of people that get involved with the hype. You want to avoid hype in any investment as much as possible, unless, once again, you're just a day trader that's out there and you see hype, you want to jump in, make some money, and move out fast. But I don't think that's what the average person wants to do. I assume that any of the people that I talk to are like myself, or hopefully a little bit better off than myself, but have limited funds to invest. You do not have to have a ton of money to invest socially and ethically. And the fact of the matter is, you don't have to trade performance for the, let's say, the social aspect of it. As I mentioned, there were a few sectors that did terrific in the last year, and there are always going to be companies and sectors that are going to do equally as well. And what you want to do is position yourself into emerging technologies, into emerging technologies that exist, though. Not something that is a pie in the sky. You also would like to look at what the government is doing. As much as it irks a lot of people, the government controls a lot of the performance in the market. For instance, a lot of the solar-powered companies that had these huge runs in the last year maybe won't have as good a run this year, because a lot of the federal incentives for people to buy photovoltaic cells has gone down. They eliminated a lot of it right out of the 2008 budget. So the fact of the matter is that they made a move in that direction, and now they've moved away from that. So it's going to be more costly for people to actually buy this product. On that same token, the government, George Bush, for whatever reason, is a strong proponent, seemingly, at least verbally, of the fuel cell industry. And there have been a lot of incentives that got through Congress that are now going to pass down to the taxpayers, so you'll get tax incentives for fuel cell technology. Now, some of it, I will tell you plain and simple, is a smokescreen. But some of these fuel cells, like for instance the ones that work off of methane, so not the hydrogen fuel cells that everyone wants to work, those are probably about a generation away. But the ones that work on methane, so they're cleaner than a combustion engine, but not quite perfectly clean, where just water and fresh air and singing birds are coming out of the tailpipe. But the fact is that it's the next step. And in places like coal mines and things like that, where methane is available, and in waste facilities where methane is basically, they have to find a way to capture it just so it's not polluting the air. Now they actually would get an added benefit out of it, and they'll be able to burn it off and make electricity. Now, as far as the different vehicles that you can use, you can find a company that does something that you feel strongly about. You could find, now you could research that company, and as I mentioned to you, it could take you all of 15 minutes. I'll give it the benefit of the doubt. In 1 hour, an average person of less than average intelligence with a library card could find out just about as much about any given company, any publicly traded company, as the experts on Wall Street. The fact is that the experts, really their only expertise, well, let's just say it's in BS. They can talk a lot about extra information, but there isn't really a whole heck of a lot of more information for them than there is for you. So find out about a company that does something that you like and get involved. And as a matter of fact, you can call them up, ask investor relations, ask the company what they're doing and what their prospects are. They're going to talk to you. On the financial world in general, or really any business, has their own little jargon. And they try and make it seem like you are not smart enough to understand this. But the fact is this. You are smart enough. Whoever I'm talking to, whoever can hear me and understand what I'm saying, you are smart enough to make your own investment decisions. And if you feel that you don't have any discretionary income that you can invest out there, once again, if you have an IRA, a 401k, you actually have control of that. I know that they try and make you feel like you don't. But if you have, for instance, a 401k and somebody's managing it, and you want that, and you don't want that fund to be managed, or those funds to be managed and put into unethical stocks and companies, you can simply change that. You can talk to the fund managers, you can talk to the 401k managers, and if they do not agree with what you're saying, open up an IRA. You could roll it over into an IRA. It's still your money. There's no penalty as long as it's rolled over for 30 days. And you can take control of that. Most people feel powerless against forces that are bigger than themselves. Exxon. Everybody wants to do something to take these guys down, but they're just too big and they're too strong. The fact of the matter is, that is only what they make you feel. You don't have to own Exxon. Yes, the oil stocks have had a great run in the last year, but as I mentioned to you, most of the solar stocks actually did better than the oil stocks in the last year and a half to 2 years. And that's something that a lot of people don't realize. Eventually, everything is cyclical in the market. Things that go up, they're eventually going to go down.
When we look at these websites for these things, what am I looking to search for? How do I know what am I looking for?
Okay, so if you want to actually do your own research and you want to know what you want to look for, here's an easy place to start. Ethical investing. Put that into any search engine. I have probably, I'm going to say 60 to maybe 70 sites saved where I've been monitoring what these different sites and these different funds want to do. Do not just take something for what it's titled. In other words, if something there are a number of funds out there that are titled, for instance, the Green Fund or the like the Human Fund or the socially responsible fund. There are a lot of funds out there that have those types of names. Don't just take it for what it's titled as, because that to me the way I look at it is there's two ways to look at everything. You can look at Coca-Cola and say this is just a company that makes a fun product that is basically harmless and there's nothing really wrong with it. They make candy. They make liquid candy that everybody enjoys. Or you can look at it as that they're a deceptive company and they're out there and they're selling all types of poisons out there, that they're getting government subsidies to put high fructose corn syrup, and they don't tell you the dangers of it. They almost make it seem like it's a health product. So you can't believe the advertising, and don't believe the titles, and don't believe any of the hype. Once you start with ethical investing, then you're going to have to narrow it down to, once again, what do I believe? As far as a populace, everybody can make a decision, and there are different investments that you can make. There are investments where you are actually buying securities. There are investments where you're actually buying products. That's something else that you want to think about. As far as when I go out there and I'm purchasing a new car, do I want to feed the beast, or do I want to go in a different route? There are investments that you could make at your house. There are investments that you make on the clothing that you wear. Another company that I always have mixed feelings about is a company like Nike. Nike is a company that, once again, make let's say an extra accessory. They make novelty sneakers, and I feel that Nike's management, especially the upper echelons of their management, are conscious and feeling people. It seems like they do put a lot of money out there to build schools for scholarships. They understand that their primary market is that they're overcharging underprivileged, inner city kids for sneakers. In addition to that, they also have they have teenagers working in sweatshops in third world countries. The fact of the matter is they can afford to, and they can have plants in the United States, or they can afford to pay a living wage to the people they have working for them.
Yes.
The only difference between what they're doing and what they're not doing is the bottom line that goes to the upper management and the shareholders. And that's something that you have to also think about, is what this company is doing. Do I feel comfortable with the business practices that they have, even if it seems innocuous, like making sneakers, like making hamburgers? Do you feel that McDonald's makes people sick, or Burger King, or whatever? I don't want to keep on picking. I just actually am just picking the biggest names I could think of that everybody would be familiar with. But there are thousands of companies that are exactly the same, where you have to say to yourself, are these companies actually doing anything? The Ronald McDonald House is terrific, and all the scholarships they do are great. But that's what they're doing with their profits. It's not what they're doing with their business plan. And what their business plan is to take a cheap product and push it on an unsuspecting, customer base. And in addition to that, they are also putting off any of the ill factors that they get from that. And what I mean by that is that if you get sick from their food, they don't have to pay for that. And having having low wage employees, that need assistance, whether it be medical or whatever, that's not something that they're concerned about. What they are concerned about is, can we sell some more hamburgers, and how can we do it? And it doesn't matter where they are. It doesn't matter. Right now they're really invading China as hard as they can. And what they see in China is an untapped market that's uneducated. They feel like America now, and this is, once again, this is not something that you have to have any type of Warren Buffett connections. This is something that you could read right from the company memos. Their feeling is that they have, there's a negative connotation that's associated with their product in America now. And now it's looked upon as an unhealthy alternative for food. So what do? They get their PR engine going. They put a few salads on the menu, and they say, we've kind of saturated this market. Let's go someplace else where they don't know about us. And that is exactly why they're going to. Right now, their best hope is that the people that work in their McDonald's will have enough money to buy the food there, because there's not a reasonable cost base, and they feel like that they will build up enough clientele using a local product as cheaply as possible, and where there are less regulations, and they'll say publicly that we're using the most stringent health regulations, just like we do in America. That is just not the case. It's the same thing where a company like Starbucks says that we are using fair trade coffee. That is a blatant lie. They're using a percentage, and the only percentage that they're using is the overage on what they can't get on the slave wage, coffee. Now, once again, Starbucks is a company that I feel started very principled. They wanted to take care of their employees. You want to also look at their employee, how a company treats their employees is kind of how they're going to think about their customers. Starbucks started out, and they wanted every employee to have a living wage. And they wanted to have a better product than everyone else out there. And they got to a certain size, and they realized the only way that they were going to get bigger and make more money was to cut certain things, the quality of their product, the services that they provided for their employees. And that's something that you have to look at and say, well, maybe this isn't a company that I feel comfortable with anymore. Maybe you were comfortable with them a few years ago, not so comfortable now. And these are the types of questions that you really have to ask. Now, with all of that said, the nuts and bolts of how it works. Once you find a company that you feel that you want to be invested in, and you feel that company has a strong enough bottom line, you want to see if they have earnings. You want to see what their prospective what their prospective earnings look like. What does their market look like? You have a few choices on how you can invest in that company. Number one, the easiest thing for most people to understand is buying stock in that company. When you buy stock in a company, you buy a part ownership. You want to make sure that you are getting a partial ownership in that company. There are a lot of companies that are set up where there are where there are subordinated shares, where there are super voting shares, and all this simply means, and once again, it's financial jargon that means your stock isn't as good as my stock. So you want to make sure the majority of the stock is real. You also want to look and see, does the company pay a dividend? Now, a lot of companies, especially smaller, smaller companies, they're not going to be paying a dividend. So that might not be something that you're as interested in as the capital gain. And a capital gain simply means I want to buy the stock at 5, I want to sell it at 50. If you feel that the prospective price of that stock is going to go higher, that is another area that you want to look at. You also want to look at the general, the general perception of the company. And it's one of those things where if generally the company is perceived as bad, then that stock is going to have a hard time performing. Also, something else that you can get involved in is the debt of that company or the bonds. A lot of corporate bonds, now many regular investors, just people like you and me, are not comfortable getting involved with corporate bonds. And the reason being is that they don't know a whole heck of a lot about it. But corporate bonds have a tendency to pay a much higher yield than the government bonds because they're not fully secured. However, all the power of that, or all the financial might, let's say, of that company is going to be behind those bonds because they need to continue to borrow money, and just check the bond rating on them. Once again, that's something that's very simple to look at anytime that you're looking at a bond. So hypothetically, if your goal is to make 6% a year, and there's a corporate bond out there that's paying 6% a year, well, all the thought's taken out of it. You're going to simply buy that bond, you're going to hold on to it to maturity, it's going to pay you 6% a year, and at maturity you're going to get exactly the money back that you paid into it. So that's something that's something else that you might want to look at. And the last thing, or I shouldn't even say the last thing because it's usually the first thing that most people look at, is a fund that already has done all this work for you. A mutual fund is just a money manager who goes out and he picks a whole bunch of companies. And he basically buys those companies, and then you buy shares of his overall portfolio. And the return that all of those companies combined get, that's the return that you will end up with. Once again, there are literally hundreds, probably thousands, of ethical and socially responsible mutual funds. At least hundreds. What you want to do is see the ones that have the same principles that you have. And if they have those same principles, then buy them. If they have the same principles and the same returns that you're looking for. Now, as with everything, and as you'll see with every mutual fund, past performance isn't indicative of future results.
What do you think of Google, by the way?
Well, as Google, as far as ethically or financial, I'll give you both.
I think.
Ethically, I think Google is just stepping over into the gray area. And the reason why I feel that is because I know that Google is one of the companies that is helping different countries filter the type of information that they're allowing to get to people. I feel like the internet is the greatest source of free information that has ever existed, and now there are companies like Google and unfortunately like Microsoft that are helping countries. And I have to believe if you're helping China and North Korea, and countries like that filter the information that people are able to get, then what's to stop you from doing that to me here in America? Financially, Google is a company that has it's had exponential growth over the past few years. However, the stock price has exceeded the growth of the company. So what I would say is, if I own the stock, would I sell it right now? Probably not. But if I was going to invest money today, would I personally buy? You should feel that emotion and say, you know what, my company is doing good things, my portfolio is doing good things, and therefore I am doing good things. And the fact is that there is a financial as well as an emotional reward that goes with it, as long as you pick the right companies.